The FBM KLCI settled 44.88 points or 2.79% lower for the day at 1,562.71 after diving in the final trading hour thanks to a mix of factors such as lower crude oil prices and equity losses. Also weighing on the benchmark index is corporate Malaysia's most recent earnings season, which investors are still digesting amid ongoing concerns of COVID-19-driven economic weakness. About 9.02 billion securities worth 7.71 billion ringgit changed hands today, while Bursa's Financial Services Index declined the most in terms of percentage at 3.22%. Top losers included Petronas Dagangan, Public Bank, Maybank and MAHB. It was reported that crude oil prices took a tumble today as investors awaited OPEC's decision on whether to extend large output cuts, although vaccine hopes helped keep benchmarks steady to climb by more than a fifth in November. Rakuten Trade Research VP Vincent Lau told the AgeMarkets.com that the drop today might have been just a minor pullback after a favorable performance throughout the month of November. He puts it down to month-end rebalancing of portfolios as market sentiment remains steady. According to Reuters, world shares poised on Monday to assess a record-breaking month as the prospect of a vaccine-driven economic recovery next year and even more easing from central banks overruled immediate concerns of the pandemic. AMMB Holdings 2Q net profit fell 25.7% year-on-year to 237.32 million ringgit, while revenue dropped 9% from 2.35 billion ringgit to 2.14 billion ringgit. It was a similar story for quarter-on-quarter, where net profit was 35% lower from 365.7 million ringgit in 1Q due to lower revenue and higher credit cost. It also saw an increase in credit costs due to higher impairment allowance for loans, advances and financing on the overlay adjutants following the loan moratorium payment holiday and repayment assistance for its customers. For the first half of FY20, bottom line contracted by 15.3% year-on-year to 602.48 million ringgit from 711.03 million ringgit, while cumulative revenue was down by 8.2% to 4.35 billion ringgit. CEO Datuk Sulaiman Mohammad Taher said in a separate statement that moving forward, the group will continue to invest in growth opportunities and maintain a sound balance sheet as it progresses to the new normal under its refreshed Focus 8 strategy and its emphasis on digital. RHB Bank's 3Q net profit inched up 1% to 622.25 million ringgit, although revenue declined by 9.8% year-on-year to 3.01 billion ringgit from 3.34 billion ringgit. However, on a quarter-on-quarter basis, net profit improved 55.27% from 400.77 million ringgit, even though revenue dropped 8.03% for the same period. Stripping out discontinued operations, pre-tax profit was 6.4% lower year-on-year at 789.9 million ringgit because of higher allowances for credit losses on loans and other financial assets, as well as operating expenses. This was offset by higher non-fund-based income. On prospects, Group MD Datuk Khairul Saleh Ramli said the group remains vigilant and continues to navigate carefully through the impacts of the pandemic and bolster its provisions to tide through uncertainties ahead. He added that RHB is committed towards accelerating its digital transformation and IT infrastructure modernization, as well as developing and upskilling its workforce and implementing its Agile at Scale program. Pharmaniaga has set up a task force as it prepares to distribute the COVID-19 vaccine nationwide by the end of the first quarter of 2021. Group MD Datuk Zulkarnain Muhammad Yusof said its wholly owned subsidiary Pharmaniaga Logistics has a track record spanning 26 years of vaccine logistics and distribution, which covers constant temperature requirement for both -20 degrees Celsius and between 2 to 8 degrees Celsius. According to Zulkarnain, Farmaniaga's warehouses in Bukit Raja Shah Alam, Juru, Kota Kinabalu and Kuching are licensed to handle cold chain products by the National Pharmaceutical Regulatory Agency. In particular, Pfizer's vaccine requires ultra-cold temperature of -70 degrees Celsius, thus frozen pre-filled syringes will be delivered in thermal shippers filled with dry ice to maintain the ultra-cold temperature. Meanwhile, Farmaniaga is also looking at a just-in-time based delivery system to ensure smooth and orderly vaccination and stock replenishment so that it won't strain hospital storage capacity. Malaysia Airports Holdings fell into the red in the third quarter of FY20 with a net loss of 319.72 million ringgit versus a net profit of 197.87 million ringgit a year ago. Revenue plunged 71% to 396.69 million ringgit from 1.36 billion ringgit as the pandemic resulted in passenger movement contracting 75%. On a quarterly basis, MAHB's net loss widened to 320 million ringgit compared with 91.07 million ringgit in the second quarter of FY20 despite higher revenue. This as it registered higher depreciation and additional provision for doubtful debts against a reversal previously. Passenger traffic for MAHB's Malaysian ops weakened by 83.2% year-on-year to 4.5 million passengers, while its ops in Turkey saw a drop of 52.5% to 4.8 million passengers. Looking ahead, MAHB expects global air travel to remain resilient as traffic recovers in the near term. Despite international border closures, 35 airlines are currently operating from Malaysia to 31 destinations in 23 countries.